Thanks so much for tuning into this conversation. All of us are intending to know what would the regulation of GST being at 28% mean for the real money gaming industry, which is a very large one at that, and a lot of questions, a lot of tweets on social media about what happens to eventual valuations, so on and so forth. Now, somebody who traverses both ends of the spectrum, which is real money gaming and non-real money gaming, is Nazara Tech. The stock, after starting off in the first 1 minute in double-digit losses, has recouped a large portion of that because a very small percentage, I believe, of their overall revenues comes in from real money gaming. But Nitish Mittersain is here to give us the lowdown on the impact on Nazara, yes, on the industry at large too. Nitish, great having you. Thanks for taking the time out. Just to get this clarified first for your company, Nitish, I believe very well diversified and not a significant dependence on real money gaming for you.
Yeah, absolutely. So from our experiences over the years, we've seen gaming to be a disruptive business, either due to technology movements or through regulatory changes, right? So we have created Nazara as a very diversified platform across products, across geographies, and across business models. So that I like to think of ourselves as a stable ship in a stormy sea. So that's the way we built the business, right, to be resilient. And therefore, our exposure to the skill-based RMG space is about 5.2% in the previous year, FY23, if I would look at our numbers. And since the time of our IPO and even before that, we have consistently said that, we think it's a large opportunity. It has scaled very well in India. Consumers are very interested. But we as a company would like to take a much larger move here only once there is regulatory and taxation clarity. Over the last few months, we did feel by certain actions of the government and certain noises that this was moving towards a positive direction. But this seems to have been completely reversed by the GST decision yesterday. I think the RMG industry in India is honestly shocked into silence right now, but they are getting back, starting to work with the associations and looking at how to mitigate this risk, how to find a via media solution. I'm very hopeful that something positive will come out of this.
Yeah, but as things stand, Nitish, and please correct me, that I'm just trying to understand the math here. If a player puts in 100, 28 gets deducted, 72 amount goes into a common pool. Best case of win loss is about 50%. Typically, the casino wins, but let's assume 50%. And then you pay, if you happen to win, about 30% of that on the winning. You really need to be very, very lucky or extremely brilliant, even if it's skill based or non skill based, as the case may be, in real money gaming to be able to make a winning in the first place under the current structure.
Absolutely. And which is why the industry is saying that with this new taxation regime, the business is virtually rendered unviable.
Right. So I would suspect, Nitish, that you have even before this, you had said that your dependence on RMG would go down from the 5% in FY23 to even lower. Now, whether or not the resolution gets changed, you will anyways take it lower. And under the current circumstances, I believe this 5% also will naturally come down in FY24 for you if the current regulation stays as is, right?
Yeah, of course. So see, I think two things are happening for us, right? One is we have many growth engines of, revenues, which are not related to RMG, because 95% of our business, which is non-RMG, is also growing. And if you see even the previous year, much of our growth came from non-RMG segments. So if this current policy sustains and is actually implemented, then I think, of course, we will have to take stock of our RMG business. We have a good team there. We have a strong team. And I'm sure they will find solutions. They will mitigate the impact to the extent possible. But we are very confident that from an overall Nazara perspective, the revenue impact to us is going to be minimal.
Right. And I'll come to Nazara after this question, Nitish, just wanting the industry perspective as well. One is, of course, what happens to businesses, but two is, of course, because there's so much of money that is gone into the private companies as well, private gaming companies, which were thriving on RMG. I mean, Dream 11 is a case in point, but there are others as well out there. Valuations, because of such a thing, what happens in the private market? You have public markets and therefore maybe not as impacted, but private market, how do valuations typically move, Nitish? What's your best guess?
I mean, they would crash. And I'm sure the investors who did invest in real money gaming in India were aware that it was a gray area, right? It was not pretty clear and took that risk. I think if this, like I said, is implemented, there's no doubt about it that one, no new capital would come into that segment, and secondly, the existing valuation would potentially crash.
Got it. Okay. Now for you, Nitish, your FY23, due to various reasons, of course, operational metrics have come off. I know we are in the maybe in the silent period, so you can't give numbers, and I want to ask you about numbers. You will probably give your
Yes.
guidance only after this quarter, or maybe in September, as the case may be. But how is the non-RMG space, which is such a large piece for you, done in the first quarter? Just a brief color, not exact numbers. And what are the plans for the rest of the year if indeed this situation gets implemented? And even if it's a small 5%, but if that 5% of your revenue is getting impacted.
Yeah. So I think we usually give guidance in September once we've done first half of. That's how we did it in post our IPO every year, and we'd like to continue that. I think our focus this year is a lot on how do we also improve EBITDA margins of the company. Because we scaled aggressively in the previous year in terms of revenue top line, and we said, right now our focus is on revenue growth. Last year was 75% growth. I think improving EBITDA margins is also an important focus this year for us. But actual guidance will come in September. Of course, our results will be due later this month.
Okay.
In terms of your second question on the in terms of your second question on the 5% impact on RMG, I think it's a few months that it will take to implement this new tax. So I think most of this year will actually not see a lot of impact. But if it does play out, then we would have to make up for some of that revenue in the coming year for sure.
Which I'm sure you'll have plans for. But Nitish, thank you for providing clarity. I know, you don't get impacted as much, but so thank you for giving the industry perspective, and all the best for your quarters ahead.
Thank you.
And viewers, that's the view from Nitish Mittersain of Nazara. Clearly, the stock recovered simply because people would have realized that RMG, or real money gaming, which is the one that gets impacted, doesn't form a bulwark of this company. It's about 5%, as the management said in FY23. And that's the kind of impact you're seeing in the stock. Not really a dramatic one, but for the others, well, there is a lot to ponder. Thanks so much for tuning into this broadcast.